So in this video today, I'm going to be covering my opinion on where I would invest $500 right now based on the current market conditions. And at the end of this video, I'm actually going to go ahead and invest $500 in one of these three portfolios. That way there's some accountability in place, and down the road I can check up on this and see how I did with my different stock and ETF selections. And the reason I'm doing this video is because about a week and a half ago, I made a video on where to invest $100 right now, and that video did extremely well. And I essentially broke down three different strategies for investing $100. A conservative approach, a moderate approach, and an aggressive approach. And I'm going to be doing the exact same thing in this video today, but instead of using $100, I'm going to use $500. But in all reality here, guys, this is totally going to change up the mix of stocks, because now we are able to invest in stocks that trade above $100 per share, because we are not using fractional shares when buying these stocks, since the majority of people do not have access to fractional trading. And before we get into the actual stock selections here, guys, let me just make this quick disclaimer that I am not a financial advisor. This is not financial advice, and you should always do your own due diligence before buying or selling stocks. This is merely what I would personally do with $500 right now, and at the end of this video, I'm actually going to invest that money in a Robinhood portfolio. Now, the very first thing I want to do is check up on the $100 portfolio I purchased in the last video. And if you guys haven't seen that video, I'll put a card up in the corner, and I'm going to link up to it down in the description below. But in a nutshell, in that video, I ended up buying my aggressive portfolio selection, which was shares of Ford, as well as Uber and Snapchat. So let's open up that portfolio now and see how I did with my selections. Alright guys, so here we are inside of my Webull $100 portfolio. The markets have gone up substantially from where those stocks were purchased, so the majority of the gains here are a result of good timing with the market. I'm not saying I have any kind of, special abilities here, but I am going to pat myself on the back here a little bit, because we did exceptionally well with these stocks in a very short period of time. I have had a 17.87% return on my purchase of Ford, Snapchat, and Uber stock, and this is how it breaks down. Snapchat stock has gone up the most, up 27.28% on the three shares. Uber stock has gone up 10.23%, and Ford stock is up 16.93%. And next week, I'm thinking about doing a video solely on Ford stock and whether or not it is a good investment at $5 per share. If you guys want to see me do that video, go ahead and drop a like for this video, and if I get enough likes on this video, I will go ahead and do that video next week. But anyways, guys, a almost 18% return in the course of about a week and a half to 2 weeks. Obviously, I'm very happy with that, but that's a very short window of time. It will be better to look at how this portfolio performs over the next year or two and see how these picks did. Alright, so first of all, let's talk about a conservative approach to investing $500. And just like with the conservative portfolio for $100, it is primarily going to be focused on ETFs, or exchange traded funds, which is essentially a way that you can own a basket of many different stocks in a very low fee manner. And this time, we are going to be investing in VOO, which is the Vanguard S&P 500 ETF. And essentially what this does for you is it allows you to own a small piece of the 500 largest publicly traded companies in the US. So that is the very first thing I would do. I would buy one share of VOO, and based on when I outlined this video, one share of that would cost you $251, leaving you with $249 left over. So of that $500, half of it is in a well-diversified, low-fee index fund owning the largest publicly traded companies, giving you a low-risk approach to the stock market. But the problem with the Vanguard 500 fund is there is no international exposure, because you're only investing in companies primarily operating out of the US. So now we're going to add a second ETF to this portfolio, which is VXUS, or the Vanguard International Stock ETF. And as the name suggests with the XUS, this does not include stocks in the US. So by purchasing VOO and VXUS, you have diversified low-fee exposure to both US companies and companies outside of the US. And shares of VXUS would run you about $44. I would buy 2 of them, leaving you with $161 left over for your final purchase. And lastly, with that $161, I would simply buy 1 share of Boeing for $154 per share. This would leave you with $7 left over, so maybe buy a share of Ford or General Electric, or save that money to invest later on. Overall, I think Boeing is a very high quality company and they should do well in the long term, but in the short term, they are massively affected by the groundings of the 737 MAX aircraft, as well as all of the financial hardships going on with the airline industry right now. So I see this as a great high quality company in a very battered industry, and I personally am buying shares and I see this as a buying opportunity. Moving on now, let's talk about a moderate or middle of the road approach to investing $500, and all of the portfolios going forward are going to be 100% stock, no ETFs past this point, which will give us more risk but a larger potential return. And the focus for this moderate portfolio is going to be tech. The very first stock I would purchase is 1 share of Apple for $266 per share, and that's going to leave you with $234 left over. I think Apple is a very high quality company. I own them in my portfolio. I've done well on Apple shares in the past, and while it's not necessarily on a massive sale right now, it is quite a bit cheaper than it was before the virus started, so I would buy 1 share of Apple to get this tech portfolio started. Next up, I would buy 2 shares of AMD or Advanced Micro Devices at $49 a piece, leaving you with $136 left over. Now, AMD is kind of a sore topic for me because this was one of my very first investments back in 2016. I bought 1,000 shares of AMD for $6.82 per share. Now, I ended up doing pretty well with these shares. I made a couple $1,000s by trading in and out of them, but the amount of money I would have made on AMD as a buy and hold investor is unbelievable. Just to give you guys an example here, my original investment cost me $6,820, and today it would be worth about $50,000 if I just held on to that stock. So it's a bit of a sore topic for me. Even though I did make some money, I had a much bigger gain if I had just been patient and held on to it for the long run. But that being said, they're still in a position where they're going to do very well for the coming years based on their current product lineup, and I expect this stock to do exceedingly well in the next 1 to 2 years. So I would buy 2 shares of AMD, call it a day, and then buy 1 share of IBM for $118 per share, and that's going to leave you with about $18 left over. Maybe look at a share of Snapchat or some shares of General Electric. There's not really a lot of good tech names currently in that price range, but you might be able to find something that you just want to toss some money in just to see what happens. But the reason for buying IBM, and it's also a stock that I currently own, is because of their massive investments in cloud computing right now, and I expect in the coming years for this company to do exceedingly well with enterprise level cloud computing, as they have already, and be up there with the likes of Microsoft and Amazon in the cloud computing business. I'm really excited about IBM. As far as the new leadership and the new CEO, who was the former head of the cloud computing side of this business, their acquisition of Red Hat. Personally, I see it as a buy, but of course you do your own due diligence and decide if you like that stock as well. And they're also a very high yielding dividend stock, which allows you to be paid in 2 different ways. So that's what I would do for a tech-oriented moderate portfolio: 1 share of Apple, 2 shares of AMD, and 1 share of IBM. Lastly, for an aggressive approach to investing $500, we are going to be looking at some aggressive growth stocks. And what that means is these companies are growing very rapidly. Apple, for example, is what you would call a conservative growth stock because although they are still growing revenue, they're not seeing double-digit or triple-digit growth in most cases across the entire business. Whereas aggressive growth stocks often trade at a higher valuation, but they are growing at a much faster rate, and there is a huge potential there for asset appreciation or buying low and selling high. So here are the aggressive growth stocks I would buy with $500. The first stock I would buy is one share of Adobe for $311. That trades under the symbol ADBE. And I know that sounds pretty expensive, guys, but keep in mind the share price has nothing to do with whether or not a stock is cheap or expensive. That is based on fundamental analysis because companies can issue as few or as many shares as they want to. Now, the reason behind buying Adobe is because I love the model of their software business and especially how they've transitioned from a one-time purchase into a subscription with Adobe Creative Cloud. I use Creative Cloud for my business. I pay Adobe like $22 per month every single month. And tens of thousands, if not hundreds of thousands of businesses are doing the same thing as me, giving Adobe a predictable monthly recurring revenue stream. And I just love this business model. I like the fact that software has no inventory. So for those reasons, Adobe is the very first stock I would buy. After buying one share of Adobe, you will have $189 left. And then I would buy one share of Salesforce under the symbol CRM for $149. This is another software company that is involved in CRM or customer relationship management. Again, for the same reasons I like Adobe, I also like this business. It is a recurring revenue model for them. Software means no inventory, and I just expect these companies to do exceedingly well as more companies shift to cloud storage for lead management, and you have more and more freelancers doing graphic design and other type of visual arts like that. That is going to help out Adobe in the long run. And then with that $50 or so left over, I would spend that on one share of AMD for the reasons that I outlined previously when we talked about the moderate portfolio. All right, guys, so now what we're going to do is I'm going to open up my Robinhood app and I'm actually going to invest $500 in one of these three portfolios. Now, since the markets have been fluctuating so much lately, I went ahead and made that purchase on Tuesday when I outlined this video because prices are moving all over the place. I wanted to make sure I could get the stocks or funds mentioned within that $500 budget. And I used Robinhood for this, which is a commission-free stock trading app. It is the best app out there for complete beginners with no knowledge of investing. And I'm going to drop a link down below if you guys want to check out Robinhood yourself. If you use that link down below, you will get a free stock when you sign up. But what I ended up purchasing here, since last time I did the aggressive portfolio, I decided to buy the conservative portfolio. So I bought one share of VOO, 2 shares of VXUS, and 1 share of Boeing, leaving me with $7.99 left over. So that is what I did with my $500, and I will do an update either here or maybe over on my Instagram if you guys want to follow me over there. I'll put my handle up, and that way we can keep track of these portfolios and see how they do over a short-term and long-term time horizon. Now, lastly, guys, I just want to go ahead and take a minute here to talk about a really cool initiative that Airbnb is launching and looking to spread awareness for. And I am affiliated with Airbnb, but this is in no way tied to any monetary gain for myself. They reached out to people looking to spread the word about an initiative, and I volunteered to do so in case you guys are interested in helping out. So Airbnb started an initiative called Frontline Stays, where they are aiming to provide 100,000 healthcare workers with places to stay during the crisis. And the idea behind this is this gives a lot of people a closer location to nearby hospital facilities or medical facilities, and it also allows them to isolate themselves from their family members. So if you are somebody who has done Airbnb in the past and maybe you don't have any bookings right now, if you have a spare guest apartment or in-law apartment or house and you want to have that available to a medical professional, there's a link down below where you can do so for free, or you can charge if you want, and maybe charge a smaller or lesser amount of money to help out these medical workers in this time of crisis. Now, for obvious reasons, you can't house these medical workers in your own home because of quarantining. But if you are interested in helping out, Airbnb is looking to offer 100,000 frontline stays, and Airbnb is not charging any of their fees as far as booking goes for guests or hosts related to these frontline stays. So that link is down below, guys, if you want to check out this initiative from Airbnb and either look into being a host or look at donating towards this cause. I just wanted to spread the word about that since I think it is a really good idea and movement. But thank you guys so much for watching this video. I hope you enjoyed it. If you want to see me do a video on where to invest $1,000 right now, go ahead and drop me a comment down below. If enough people want that video, I will make sure to put that together. But anyways, guys, subscribe, hit that bell for notifications, use that Robinhood link if you want to get a free stock, and I will see you in the next video.